And welcome to the Market View commentary for Monday, the 22nd of February. My name is Kevin Hurley. I would typically be doing this live, but I have a boy that has been called to go play on an elite soccer team, and we need to run him up to the University of Utah for his practice day before his tournament coming up Friday, Saturday, Sunday. So I'm pre-recording this for you. Glad that you're here with me. Hopefully everyone will be able to, well, hopefully this will be helpful for you as you watch it on the recording is what I'm trying to tell you. With that said, here we go. Let's get started. Today I want to go over a couple different things, but primarily what's most important for me today is what happens during these, what would you say, during the holidays. Why we tell in the past, hey, you typically don't want to make a trade on the volume because that one day isn't a trend. Light volume isn't a trend. There's a bunch of things we could say, but for all honesty, what history says about the stock market performance the week of Thanksgiving is really pretty good, plain and simple. And I pulled this article from Market Watch. The short answer is, what's going to happen over Thanksgiving? For us, markets closed on Thanksgiving. We have a half day on Friday, but the return for the last 20 years, whole week is typically up 0.87. If you want to go since 1945, it's 0.6. But that is what we are looking at for market growth for the whole week. Usually Monday, well, it's usually up 0.5%. Today it was down, 0.32%. Tuesday is usually down the last 20 years. We'll probably see that up. So we are what am I trying to say? I just lost my train of thought. Let me try this again. Usually the market's up 0.5% on Monday. That's big money putting their positions and being done for the week. For us today, when market was down, I believe a 0.32. So we had a down market today in regards to our markets and what happened. Tuesday is usually a reversal. So if we had a reversal like history on Monday, probably big money goes in on Tuesday. Kevin, why would you say that? Well, big money is going to get a general idea of GDP and durable goods, and it's probably going to be better than expected, as well as personal income and personal spending. Everything gets crammed into Wednesday. So for whatever reason, we went through a reversal today, probably going to see that reverse on Tuesday as big money's done for the week and they put their money to work based on economic events that are coming up. Wednesday is usually an update. It's low volume. Friday is usually a slight update and there's no volume. And obviously on Thursday, the markets are closed. Friday usually being a half day. So for the most part, we're okay. We're okay. And because there's not a true trend, we're not looking to make any big movements this week, plain and simple. This week is not a big movement week. We found another article about Thanksgiving and Black Friday affects stocks. Millions are shopping, Black Friday weekend in stocks. Monday, we get our Black Friday numbers, although now we've gone into Cyber Monday, and the reality is the one-time Black Friday, go get the biggest deals, wake up at midnight, go to the store. With COVID and where we're at right now, with the fact that companies are now extending that to like Black Friday week, for all intents and purposes, Black Friday does not hold the same importance. With that said, how much are we going to spend? And because of last year, anything that we do is most likely going to be better than it was the previous year, right? Last year being COVID. Anything we do this year is going to be better than the previous year because of COVID and the way things were shut down. Now, will that mean Cyber Monday won't be as good because people might actually start to go out? I don't know, but I would expect sales to be strong. Someone asked me most recently, well, Kevin, you talked about a Christmas rally, and it's pretty interesting because sectors from 1 week before Black Friday to 1 week after, retail stocks posted as much as a 5% gain and an average 3% gain for the S&P during that period. I'm at that bottom paragraph there. Not to mention the Santa Claus rally, just for definitions to help you understand. The Santa Claus rally is typically the day after Christmas to the Monday after New Year's. So that is how you define the Christmas rally. It's 7 or 8 trading days is your typical Santa Claus rally that you have. I've got information on here for you to read about it, but more important, a Christmas rally is why do stocks rally in December? And it comes down to this. The rally is sometimes attributed to the following: increased investor purchasers, anticipation of the January effect, or plain and simple, you're going to see people playing catch up, people not being in the market, and they go all in is what it really comes down to. And when you go all in, you see an increase of buying, which is also why you see most people tax harvesting next week. Next week, you'll see some people basically getting out of their positions. I would also think that you're going to see this year, I can go ahead and type a little bit in here. My expectation is this is the year that you, Times New Roman, this is the year that you take your profits and you take them now. So if people were to ask me, well, Kevin, what do you mean by that? I would say take your profits this year and now at market highs, because higher taxes, I'm just going to say different because I don't want to say higher, but different capital gains, rules and regulations. And last but not least is pigs get slaughtered. I want cash going into next year. So that's going to be the real push. That's the real push. Someone's asked me, well, Kevin, why were we protecting into this year? And the reality is we had a lot of anti-economic growth by way of policy out of Washington. What offset that lack of positive growth or GDP growth out of Washington? I thought it was pretty interesting. It was stimulus. The hope of stimulus money going across. In fact, we have another package, the Build America Great package, that's trying to go through right now. Passed the House on Friday. Does not look like it'll get through the Senate. The Senate, the breaker will be the Vice President Harris. But right now it looks like 3 Democrats are against the new stimulus bill, and only 1 Republican is going to change ranks and vote for it. So right now it looks like we have a 2-vote margin to not get a second stimulus bill, and that second stimulus will include $320 billion for more green, for solar type companies for renewable energy. You'll see the tax credit extended all through next year. So if you have kids, the checks you've been getting the last couple months, you will also get all through next year. I'm worried about taxes last year. Some of my tax credits were paid to me for kids. I didn't even want it, which means I might have a bigger than expected tax bill, as those credits, half of them were paid to me via checks throughout the year, which just means I'm going to have to pay it off come April. So running into next year, I think eventually we need to have that pullback, and eventually it's not going to be real growth that moves our GDP. It's going to be, it's going to be people opening up their eyes to the absolutely ridiculous spending that we're doing right now. Briefing. The briefing author recently turned 50. I will turn 50 next year. To my children, that makes me a boomer. But there are some generational divides, and that's a little interesting what I thought today. Some of the retail reports were delivered, and Target got smacked. Target is down. In fact, Target is down, testing the 50-day simple moving average. Is Walmart better than Target because it only fell 3.1 versus 5.6? Probably not. But this is again where margins are starting to, you want to say, get compressed. I think they expand, but margins are being compressed, like profit margins are being compressed, and they'll be less because the cost of travel is becoming more expensive. The cost of getting stuff shipped in from overseas, the cost of traveling across the United States, it's all becoming more expensive right now, and it is tearing down some of the profit margin, increasing the expense of transportation. What else are they going to print on the big picture? The big picture, Revlon, not too important about this. Oh, I do like what it all means here, right? People are speculating right now into Rivian, whatever the heck the autonomous driving is. Blue chip stocks aren't considered cool. They're now considered slow growers, at least for that age of people that are expecting stocks to double in a year. That typically doesn't happen. In fact, what I found pretty interesting, if you look at Costco this year, what a ride Costco has taken. Costco has just absolutely shot through the roof. It doesn't make sense. Costco is so overvalued. It's ridiculous. It is just absolutely ridiculous. In the last 6 months, 374 to 539. If I change this out to a year, excuse me, if I go out to at least the calendar year, we've had Costco literally go from the lows of 305 in March up to 539. It did start the year at 378, so it's not a huge year, but what a year a blue chip like Costco has had. I don't find this boring. In fact, from 374 down to 350, 20% drop, that gives you 20% more shares into a run from 305. Not that we would have caught it at 305, probably would have caught it around 320, but from 320 up to 539, about $220. What a run by Costco. So, question, is it more important to be in the blue chips, or is it more important to be in these speculative ones? I found it interesting because one of my boys is doing some studying. Jared, he comes and he asks me questions all the time. Well, Dad, why haven't you invested in Amazon or Tesla? Sorry, fighting off a bit of a cough here. And I told him, well, valuation. He's like, I don't know what valuation is. I said, well, fundamentals show that companies shouldn't grow that fast, and they're definitely going to slow down and should slow down ridiculously. Amazon wasn't profitable for 20 years, yet it justified like a $2,000 stock price. It doesn't make sense. In fact, the stock price now, for the teens of millions of profit it brings in on 30, 40, 50 billion dollars in sale, Amazon is so overvalued, it's ridiculous. Same thing with Tesla. There's no way Tesla should be at the price it is compared to the Fords and the General Motors. It's absolutely outrageous, and it does not make any sense. So his next question is, well, don't you wish you would have been in them? And yes, I do. I would love to be in a winner like Tesla and Amazon. But again, it comes down to, you're not asking me to go gamble with your money. You're not telling me, hey, go gamble, go try to find one of these that is really the next skyrocketing, overvalued company. That's not what we do. We've had great runs in Apple and Baidu over the years, great runs in Disney. We're having a great run in Ford and Bank of America this year. There's opportunities there that require fundamentals, that require seeing stocks run the way that they should. So with that effect, it was kind of interesting conversation with him that, you know what, I'm not looking for those things. I just want to make sure that I'm a boomer and that I've got my numbers that justify where I'm supposed to be at. If we look at the Dow Jones Industrial Average, it turned negative last week, but it looks like we're kind of hitting those lows from October. We'll probably bounce higher through the rest of this week based on historical levels. Also, if you look at the Dow, sorry, I went a little high, institutional money should be coming back in. Oversold down there. I would expect to see it kind of hit these lows right here, somewhat of a resistance support level, and bounce higher through the rest of this week. Especially if GDP or durable goods numbers come in anywhere close to where they should be, that'll be a positive. S&P 500, we're just doing that little bounce off of overbought. Would not surprise me if we were to go down and test that 4630 range, and then we'll bounce right back higher for our next leg up. Interesting to see if we hold tomorrow the median line on the Williams percent R. Kevin, why do you use Williams percent R? Because your MACD for 2 weeks has been laying on top of each other. So you do not have a signal. It's pretty standard RSI, some type of moving averages in the MACD. You don't have a MACD signal for 2 months now. 2 weeks now. That's why I use a Williams percent R. I want a signal on what's happening when sometimes you have a MACD laying on top of each other. Sometimes the RSI is laying on the median line. Can't make a decision. That's why I use a Williams percent R or the stochastics come into play. All right, here, let's see what else we have. We have the NASDAQ. Also coming off of overbought. Wouldn't surprise me to see it maybe go down one more day to that 640 range, and then bounce higher from there, or just bounce higher tomorrow. Get a bounce right here, just get a bounce out of no man's land, and off we go. It was disappointing to see it not continue higher today. I'm still calling for a 2.5% S&P 500 gain for the year. Earnings, this is like the first big week. Well, it's technically second week, but the first big week of retail, all crunched into Tuesday. Abercrombie and Fitch, American Eagle Outfitters, Burlington, Best Buy, Dick's, Dollar Tree, Guess, Gap, Hewlett-Packard, Nordstrom's, VMware. Big day coming up, as well as today after hours. Zoom was reporting. If I take a quick look, I am curious to see what's happened with Zoom. Zoom. What did Zoom do after hours? I would think it'd probably fall. In fact, Zoom is down $15 right now, 6.24%. So Zoom's earnings were not really good, which will most likely affect our futures running into next year, tomorrow. I wonder what our futures are. Our futures are now, but will probably be down as Zoom didn't have great earnings. Economic report, Wednesday's the big day, but it'll be light volume. Anything good, we'll see it bounce significantly higher. Same thing on Friday to catch in. Market is closed on Thursday and a half day on Friday, only up for what, 3.5 hours? Usually closed by 11 our time, so that's 7:30, 4.5 hours of trading. I have a couple interesting articles. If Biden picks Brainerd over Powell for chief, expect immediate market impact. She is very dovish. Brainerd is extremely dovish. So if she is chosen, more easy money. We're just going to keep kicking that can down the road. It'll be very interesting to see what happens. Although I'm reading the news right now, Powell is chosen for the second Fed term. Right after Powell chosen for a second Fed term 10 minutes ago. So you can ignore this article because Powell is chosen for the second term as the Fed. It looks like Biden doesn't want to have to upset the apple cart, which is kind of interesting. I would suggest, though, you might read this just in regards to seeing what you could have seen by a very dovish, and obviously be our second female Fed president. She is ridiculously smart. Ford dropped a bombshell on chips. You want to know why the stock's taking off? Please read through this article. Pretty interesting to see a big company go in cahoots with a chip maker so that they can have some control of those chips and not have those semiconductor shortages that have constrained them this year. Interesting article, stocks with pricing power that will thrive despite inflation going higher. I found some of these important, but I disagree with quite a few of them. U.S. names on technology include Oracle, MasterCard, and Visa should do well. Chip makers, KL, Tenor, and Intel. I disagree on Intel. I would change Intel for Micron. Biopharmaceutical companies should be okay. Again, we're trying to crack down on that, right? Pretty interesting article. Please read through some of those. I found a very interesting article. Experts say the 4% rule on popular retirement income strategy is outdated. It is totally outdated. It's not what it used to be. Please read through the article. You can no longer spend 4% because you can't make 3.3%, 3.5% in those bonds anymore. Interesting article on the market is one more bad inflation report away from a correction. This is from Wharton's Jerry Siegel. There's inflation risk on there as it affects our market. And last but not least, don't be surprised that COVID cases are on the rise. I hope you all enjoy yourselves with your Thanksgiving, but do expect COVID cases to be rising. I would like to think we won't be shot down, but, and I know Maud and Dr. Gupta will probably chew me out for this, but that herd mentality for vaccination is so not happening. With 59% of the population vaccinated and 29.3 million having received their booster shots, in Utah, it's twice as bad this year as it was last year for COVID. So the herd mentality, the herd vaccination thought process, it is not working right now in my state. In fact, we are having twice as many cases as last year, even though almost 60% of the population is full. So from there, guys, I appreciate you guys. Have a wonderful evening, and I will look forward to talking to you next Monday. Good night. Bye-bye.